Welcome back. Happy Monday. More and more American companies raising 401k contributions, even without telling employees. Companies like Apache, Google, Credit Suisse, upping their traditional standard contribution of 3% to as much as 10%. In an effort to grow employee 401ks, help you retire with the necessary money. Joining me now is a man that hopes to bloom your 401k. He is Bloom President Greg Smith. Greg, good to see you. Thanks so much for joining us.
Great to be here.
So tell us about Bloom and what you're trying to do in terms of 401ks.
So basically, there's no more safety net for Americans. Pensions have gone away, Social Security uncertain, and 401ks are basically the only thing people have left. And you'll know the average American has about $3,000 in total savings. So we're trying to make 401ks dead simple for people. So it's not like, you know, learning how to do your own heart surgery or learning how to fix your own car. We basically use the image of a flower to make it easy for people. And our target client is not a sophisticated investor. We're looking to go to someone who's on the assembly line at Ford or a public school teacher in Baltimore that never wanted to have to sort through 100 choices.
So what do? You come in and you basically say, look, this is the plan that you probably want to follow based on where you are in life. And you're giving recommendations in terms of how to allocate the 401k money?
Yeah, so we do three things. The one is we look at fees. The average American pays $150,000 in 401k fees over their lifetime. We cut those in half on average. Second thing we do is very basic.
How do you do that? How do you cut fees in half?
So a lot of people choose active mutual funds, and we're very much of the Jack Bogle Vanguard school of thought, where we think people who are not sophisticated like you all are on this panel should not be trying to pick which money manager will beat the market. So that's the one thing we do. Second thing we do is very basic, and there are a lot of 20-year-olds in this country that are sitting in money market funds. There are a lot of 60-year-olds who are 100% in stock, and we do a very basic thing to people. We're not telling you we can beat the market. We're just going to get your risk and your asset allocation correct. Final thing we do is we're a little bit like a dietitian. We don't just tell you what you should eat. We actually go into your 401k and we make the changes for you, which I think is a massive hurdle for people.
So is that like an advisory function? Like you sit there and you actually go in there and say, look, you don't own any, you don't agree with Anthony and Keith, you don't own any long-term bonds, you should. Let's tilt that.
Absolutely.
Okay.
Yeah, so we, a lot of people, I think it's intuitive to everyone here, but we walk outside and you say asset allocation, you say bonds, I think.
They don't know what things you're talking about.
The basic things, and we shouldn't expect people to know this stuff. So there's this huge space called fintech, financial technology, which is emerging, which asks the question, in 20 years, how will young people deal with finance? We take the view that it'll no longer be hundreds of choices, it'll be fiduciaries, and we're a fiduciary regulated by the SEC that does not claim to beat the market. So when people say to us, how do you do versus the next guy, we actually say to them, that's the wrong question to be asking. The question you should be asking is, how do I get my behavior right for 25 years? Because in our view, the only way the stock market works is over long periods.
Right, sure.
I think traders should be timing the market on a day-to-day basis, but the average American, we believe, should really be using stock markets for more than 5 years.
I totally agree.
So, Greg, you're absolutely right, and I will say from my experience in my prior life, having looked at plenty of 401k balances, for 60-year-olds, I know that a lot of people have been sitting in cash when they could have been invested in the stock market. So I think it's a very, very critical function. But my question is, it's a plan sponsor, right? The plan sponsor has the responsibility to educate their plan employee.
Yep.
So how do you partner with plan sponsors, or how do you go around the plan sponsor?
You're asking a great question. And in an ideal world, a benefits department should want to deliver the best benefits to their employees. But what we have right now is maybe a 20-year-old 401k system that at times, if you're a Baltimore City public school teacher, you log in, you're given 100 choices with names like Ultra Platinum, VDOT.
Nobody knows what that,
How is someone supposed to choose? So we think the future of 401ks, we're already partnering with plan sponsors, is reduce
how do you incentivize people to put money into their 401k? How do you incentivize people to put money in their 401k?
So I think certainly there are many Americans that leave free money on the table, and everyone knows many companies in America give you matching contributions. Yep. So we would encourage everyone max out. Even if you have a bad 401k, you should definitely be maxing out your contributions. Secondly, if people are more confident about the decisions they're making, and we all know there's a concept of paralysis of choice. If you're given 500 choices, you may actually make no choice because it's so difficult. So we make it dead simple for people. We don't have a Nobel Prize winner who says they're no better than the next person, but we think just getting that basic behavior will incentivize people to contribute more money. And there are many studies that show the more confident your employees are, morale goes higher. Especially young people, we all know, are saving less than ever. So we go to HR departments and plan sponsors and say to them, Bloom radically improves savings rates. We have the fees of your employees, and you can sell it to your employees as a no-brainer benefit you're offering.
I like it. Greg, good to see you. Thanks so much.
Thanks, everyone.
Greg is the president of Bloom.